You know, when you first signed on that dotted line for your mortgage, it probably felt like the perfect fit, right? But what about now? Your life changes, your money situation changes. So we got to stop thinking about a mortgage as this one-and-done deal. Think of it more like a powerful financial tool, and maybe, just maybe, it's due for a little tune-up.
So that really brings us to the big question, doesn't it? Is that home loan you got all those years ago really the best one for you today? And, this isn't just a small talk question. Answering it honestly could literally unlock thousands of dollars in savings. And hey, if you're thinking, maybe not, then I've got good news. The solution is called refinancing. It's basically like trading in your old loan for a shiny new one with way better terms. So let's dive right in. We're going to walk through 5 super clear signs that it might be time for you to think about doing exactly that.
All right, sign number 1. This is the big one, the one you hear about most often. Interest rates have dropped. Look, the economy's always doing its thing, the market goes up and down. But here's the deal. Even a tiny little dip in mortgage rates can be an absolute game changer for your wallet.
And you don't have to take my word for it. The numbers really speak for themselves. Let's just look at this example, right? Say you've got a $300,000 loan. If you can drop your interest rate from 5% down to 3.5%, well, your monthly payment goes from about $1,610 all the way down to $1,347.
I mean, think about that. That's over $250 back in your pocket every single month. Now, do the math, multiply that by 12 months, and then by how many years you have left. Yeah, we're talking about massive savings pretty darn quick.
So, the big takeaway here is super simple. Don't guess. Seriously, go find an online mortgage calculator. They're everywhere. Punch in your own numbers, see what the current rates are. Just seeing those potential savings in plain black and white, that's the fastest way to figure out if this is something you should really look into.
Okay, let's move on to sign number 2. This one isn't about the market changing. This one is all about you. We're talking about your credit score. Look, maybe when you first bought your house, your score wasn't stellar. But if you've been on top of your payments, managing your debt, chances are you've earned yourself a much better score. And you know what that means? You've earned access to much better loan terms. And this chart right here shows exactly why that is such a big deal. So a lender might have given you a 4.5% rate when you had a 650 credit score. Totally normal. But what if you've worked hard and boosted that score all the way up to 740? Boom, now you could be looking at a rate closer to 3.5%. And trust me, that single percentage point difference is absolutely huge over 30 years.
And here's the real pro tip. Lenders save their absolute best rock-bottom rates for people with excellent credit. And that magic number? It's usually right around 740 or even higher. So if you've crossed that line since you first got your loan, you owe it to yourself to see what kind of VIP offers are waiting for you now. All right, so saving cash every month is awesome, for sure. But some of you might have a totally different goal in mind. You just want to be done with this mortgage faster. And that brings us to sign number 3, refinancing to a shorter loan term, like switching from a 30-year to a 15-year.
Now there's a trade-off, and this table shows it perfectly. Let's say you owe $200,000. If you switch to a 15-year loan, yeah, your monthly payment is going to go up, in this case by a little over $300. But just look at that last row. The total interest you pay. That, my friends, is where the real magic happens.
It's honestly incredible. Over the life of this new loan, you'd save over $50,000 in interest payments. $50,000! You build equity way faster, and you own your home, free and clear, a full decade sooner. I mean, that is just a massive long-term win.
So really, this whole strategy boils down to one thing: cash flow. If you've gotten a raise or your income has gone up and you can comfortably handle that higher monthly payment, it is an incredibly smart financial move. You're basically paying your future self by dodging tens of thousands of dollars in interest.
Okay, for our last section, we're going to group 2 signs together because they're both about making your mortgage fit your life, not the other way around. This is where your loan stops being just a debt and starts being a really flexible tool to help you hit new goals or just get some peace of mind.
So there are 2 big plays here. First, our 4th sign is tapping into your home's equity. With a cash-out refi, you can actually borrow against the value you've built up in your home to pay for big things like a renovation or college tuition. And then the 5th sign is all about finding stability. If you have one of those adjustable rate mortgages, an ARM, where the rate can just jump up, that could be kind of scary. Refinancing to a good old predictable fixed-rate loan means your payment is the same every month. No surprises.
Okay, I know this all sounds pretty great, and it can be. but before you get too excited and start calling lenders, we need to hit pause for a quick reality check. Because while refinancing can be an amazing move, it's also a major financial decision. It's not the right call for everyone in every single situation.
So before you jump in, you've got to do your homework. First, remember there are closing costs. It's not free. You need to figure out your break-even point, the moment when your monthly savings finally pay off those upfront fees. You also got to think about your future. Are you planning on moving soon? And probably most important of all, talk to a pro. Get advice that's actually tailored for your specific situation.
So let's wrap this all up. At the end of the day, refinancing is just a really powerful financial tool. When you use it the right way, it can lower your payments, help you pay off your house faster, or even free up cash for other big priorities. It's all about making your biggest asset, your home, work a whole lot smarter for you.
And that really leaves us with one last big question to think about. Your mortgage shouldn't feel like this 30-year wait you just have to drag around. It should be an active part of your financial game plan. So take a minute, think about your own loan, and ask yourself this, honestly. Is your mortgage working for you, or are you working for it?